dear students, welcome to the 11th session on the chapter Final Accounts of Companies. Here in this session, I have taken up a question which had appeared for 24 marks, wherein we are going to prepare both profit and loss account and balance sheet along with the relevant notes. Let me read the question now. The following is the trial balance of Bharat Company Limited as on 31st 12 2007. They have given in the trial balance paid up capital, reserve fund, provident fund, goodwill, machinery, livestock, building, 8% mortgage debentures, datas, creditors, opening stock of raw materials, opening stock of manufactured goods, bills receivable, advance payment of income tax, bills payable, cash at bank, purchase of raw materials, sales, returns, discount, investments, manufacturing wages, carriage inwards, factory expenses, office salary, office furniture, preliminary expenses, bad debts, provident fund contribution, directors' fees, interest on debentures, dividend on investments, profit and loss account appropriation balance on 1/1/2007. So these are the items in the trial balance. Now coming to the adjustments which are given. Prepare trading and profit and loss account for the year ended 31st 12 2007 and balance sheet as on that date after noting the following. First one, the company has an authorized capital of 2 lakh which is divided into 2000 equity shares of rupees 100 each, on which 1000 shares were subscribed. Second one, stock on 31st 12 2007 consisted of raw materials worth rupees 24,000 and manufactured goods worth rupees 14,380. Third one, right of 50% of the preliminary expenses. Fourth one, interest on mortgage debentures is paid for 6 months up to 30th 6 2007. Sundry debtors include rupees 1000 advance for expenses. Provide depreciation on machinery at 10%, building at 5%, office furniture at 6%. Provide rupees 1350 for doubtful debts. Eighth one, make provision for taxation to the extent of 4000 rupees and transfer to reserve fund to the extent of 2000. The directors have proposed a dividend at 12% on the paid up capital. Okay, so this is the question. Now let us analyze the question and let's find out which items have to be shown in which note number. Now coming to the first item which is given in the trial balance, it is the paid up capital. So in the first adjustment they have given here information about authorized capital and also subscribed capital. Okay, so this will come in note number 1 under share capital, where we are going to first write authorized capital, which consists of 2000 equity shares of rupees 100 each, 2 lakh, but that will not be considered for totaling. You have to underline that. In the next line we are going to write what is the issued and subscribed capital. Here it is given that 1000 shares were issued and subscribed, so 1000 equity shares of rupees 100 each, amount will be 1 lakh. Again you have to underline that. In the next line we are going to write what is the called up and paid up capital. It is same as the issued and subscribed capital, 1000 equity shares of rupees 100 each, 1 lakh. Okay, so we are going to show this one as well as paid up capital in note number 1. Then they have given reserve fund, so note number 2, that is reserves and surplus. Then provident fund, it is a long term provision for the benefit of employees, note number 6. Goodwill, note number 11, that is fixed assets. Machinery, again fixed asset, note number 11. Livestock, also 11. Buildings, fixed asset, 11. 8% mortgage debentures, it is a long term borrowing, note number 3. Sundry debtors we have to take in note number 18, that is trade receivables. Sundry creditors, note number 8, that is trade payable. Opening stock of raw material. So this is the item which we are coming across first time while solving the question. Till now we have solved the question, and every time in note number 24, that is cost of material consumed, we have written as nil. But in this question they have given the information to calculate the cost of material consumed. Here they have given the opening stock of raw material. Here they have given the purchase of raw material, and in the adjustment they have given what is the closing stock of raw material. So using these three informations, it is possible to calculate what is the cost of material consumed. The formula is opening stock add purchases less closing stock. So this will give us what is the cost of material consumed during the year, which we are going to take in note number 24. So opening stock of raw material we are going to consider in note number 24, that is cost of material consumed. Then opening stock of manufactured goods, so this is like any other question, we are going to consider that in note number 26 while considering the changes in the inventories. Then bills receivables, note number 18, that is trade receivables. Advance payment of income tax, it is like a payment of payment in advance of any other expenses, so it will come in other assets, other current assets, note number 21. Then bills payable, note number 8, that is trade payable. Cash at bank you have to consider in note number 19, that is cash and cash equivalents. Purchase of raw materials. So here please remember there is a difference between purchases of raw material and purchases. Okay, purchases we show in note number 25, but here they have given purchases of raw material which we are going to consider in note number 24. So in this question, note number 25, purchases amount will be nil. Then here in the next page we can find sales. We are going to consider that in note number 22. Returns, they have given both the balances, that is debit balance as well as credit balance. Debit balance represent sales returns which we are going to consider in note number 22, and credit balance 1000 rupees represent the purchases returns which we are going to consider in note number 24, that is while calculating the cost of material consumed. The next one, discount. Again, for discount also they have given two balances, debit as well as credit. Debit balance represent discount allowed, which we are going to consider in note number 30, and credit balance represent discount received, which we are going to consider in note number 23. Investments, it represent non-current investment, we are going to consider in note number 12. Manufacturing wages, note number 27, that is employee benefit expenses. Carriage inwards we have to consider in note number 30. Factory expenses 30. Office salary 27, that is employee benefit expenses. Office furniture we have to consider in note number 11, that is fixed assets. Preliminary expenses, it is like any other fictitious assets, we have to consider in note number 21, that is other current assets. Bad debts we have to consider in note number 30. Provident fund contribution, in the previous page we have come across this provident fund, so it is the accumulated amount, how much is there, 3000, but this provident fund contribution means during the years they have contributed so much. Okay, so that will be considered in note number 27, that is employee benefit expense. One is directors fees, we have to consider in note number 30. Interest on debentures, they have given 1200. If you see the debentures amount and percentage here, so 30,000 into 8%, it comes to 2400 annual interest, but they have given only 1200, which means only for the first 6 months they have paid, another 6 months it is outstanding. Even it is mentioned in the adjustment also, here it is mentioned. So we are going to show that in note number 28, that is finance cost. For the paid amount we are going to add the outstanding balance, and once again that outstanding balance should appear in note number 3, where we are going to add that outstanding interest to the amount of debentures in note number 3. Then dividend on investment, so this is a credit balance, so dividend received, so note number 23, other income. Profit and loss account we are going to consider in note number 2, that is reserves and surplus. Then they have given the adjustments. First one, as I said, we are going to consider in note number 1. The second one, they have given the closing stock on 31st 12 2007, which consisted of raw materials worth rupees 24,000. As I told you in the previous slide, we are going to consider this in note number 24 while calculating the cost of material consumed. One more time, it is an inventory we have to consider in note number 17. Then one more closing stock is that is closing stock of manufactured goods amounting to 14,380. So this will come once in 26, that is changes in the inventories. One more time we have to consider in note number 17, that is inventories. The next one, write of 50% of the preliminary expenses. Here we have found preliminary expenses amounting to 5,000. 50% should be written off. Whatever you write off, that becomes the amortization expenses. We are going to consider that in note number 29, depreciation and amortization expenses. One more time, whatever you write off, that should be deducted in note number 21. Interest on mortgage debenture is paid for 6 months up to 30th 6 2007. So first 6 months it is paid, another 6 months it is outstanding. Once it will come in note number 28, one more time in note number 3, we have to add it to the amount of debentures. Then sundry datas include rupees 1000 advance for expenses. So in the datas they have included 1000 rupees which is paid for expenses in advance. Okay, so that should be deducted from the datas. So datas is note number 18, that is trade receivables. From the datas we are going to deduct this 1000, and this 1000 will again come in note number 21, like prepaid expenses, advance expenses paid in advance, that is other current assets, note number 21. Provide depreciation on machinery at 10%, building at 5%, office furniture at 6%. All these are the depreciations which we are going to charge on the fixed assets. Once it has to come in note number 29, that is depreciation. One more time it has to come in note number 11, that is fixed assets. The next one, provide rupees 1350 for doubtful debts. So this will once come in note number 18, that is from the datas we have to deduct it. One more time it should come in note number 30. The next one, make provision for taxation to the extent of 4,000. So this is the provision for taxation which we are creating for the current year. So once it will come in note number 10, that is short term provisions, and one more time you have to show under tax expenses in the profit and loss account. The next one, transfer to reserve fund 2,000. So once it will, both the times we are going to show in note number 2 itself, that is under reserves and surplus to the reserve fund which is already there, the accumulated reserve. We are going to add this transfer during the current year. One more time, under the appropriation of profit, we are going to write this amount. Then directors have proposed a dividend of 12% on the paid up capital. So proposed dividend is like they have just declared it, they have not yet paid. So it will be one shown in note number 9, that is other current liabilities, and one more time you have to show in note number 2, that is reserves and surplus, that is like a appropriation of profit. How do we calculate? 12% on the paid up capital. Here they have given paid up capital as 1 lakh. So on 1 lakh we have to calculate 12%. So as we have completed with the discussion, now let us take up the solution part. In notes relating to profit and loss account, we are starting with note number 22, that is sales, from which we are going to deduct the sales returns. The debit balance which is given in the trial balance 2,400, we get 1,81,300. Then other income, we have two items here, discount earned and dividend on investment, total of which is 1,480. 24 is cost of material consumed, opening stock of raw material, add purchases of raw material, and again there is one adjustment here. So there is purchase return, so that purchase return should be deducted from this purchase of raw material. So it will be 30,000 plus 87,000 minus closing stock of raw material, which is given in the second adjustment. So you will get 93,000 as the total for note number 24. 25, purchases of stock in trade is nil. Then note number 26, changes in inventories. We are going to write opening stock of manufactured goods 16,000 and closing stock of manufactured goods we have to deduct. We will have positive value of 1,620. Then employee benefit expenses, we are going to take three items: manufacturing wages, salary, office salary, and provident fund contribution. Total is 39,000. Under finance cost, interest on debenture which is paid, for that we are going to add the outstanding interest. Total would be 2,400. The next one, depreciation and amortization expenses, write off preliminary expenses. So 5,000 into 50%, which comes to 2,500. Next one, machinery, we are charging 10% on 25,000, 2,500, 5% on 37,000, that is depreciation on building 1,850, 6% on furniture amounting to 5,000, 3,000. So total will be 7,150. Then other expenses, we are going to write discount allowed, carriage inward, factory expenses, bad debts, then directors fees, reserve for bad debts, which is given in the question. So total of note number 30 would be 21,050. In the profit and loss account, we are going to begin with note number 22, that is revenue from operation 1,81,300, other income 23, that is 1,480. Total of note number 22 and 23 will give 1,82,780. So that is the total income which we are going to consider as Roman number 1. Below that we are going to write the various expenses. Note number 24, cost of material consumed 93,000, 25 is nil, 26 1,620, 27 39,000, 28 2,400, 29 7,150, 30 is 21,050. When you get the total from 24 to 30, you get 1,64,220. Now we are going to have the difference between the total income and total expenses, that is profit before exceptional item, extraordinary item, and taxes. So the profit here would be 18,560. In the next line we have to show exceptional item nil, we are going to have the same balance. In the next line, less extraordinary item nil, we are going to have the same balance, which is called profit before taxation. In the next line we are going to deduct the provision for taxation amounting to 4,000. We will have balance of 14,560, which is considered as profit for the current year. The next step is preparing the notes relating to balance sheet. In that, first one is share capital. So here we are going to first write what is the authorized capital, 2,000, equity shares of rupees 100 each, which comes to 2 lakh. This should be underlined because we are not considering that for totaling. Then subscribed, called up, paid up capital is 1,000, equity shares of rupees 100 each, 1 lakh. So total of note number 1 is 1 lakh. Note number 2, reserves and surplus. We are going to first write reserve fund, which is accumulated given in the trial balance. For that we are going to add the transfer during the current year. So reserve fund balance is 19,000. Then one more item is profit and loss account. This is the balance which is brought forward from the previous year, which is given in the trial balance. For that we have to add the profit for the current year. So we will have 17,190. From that, two appropriations, that is transfer to the reserve fund and proposed dividend. So these two balances should be deducted. So we will have balance of 3,190. So total of note number 2 would be 22,190. Note number 3 is long term borrowings. We are going to first write the debentures amount 30,000, add outstanding interest 1,200, it would be 31,200. Note number 4, deferred tax liabilities nil, 5 is also nil. Then note number 6, long term provision, we are going to write the provident fund 3,000. Note number 7 is nil. Note number 8, we are going to write two items, creditors and bills payable 21,490. Note number 9 is other current liabilities. Here we are going to write the proposed dividend at 12% on paid up capital of 1 lakh, that is 12,000. Then short term provision, note number 10, we are going to write the provision for taxation 4,000. Note number 11, we are going to write various fixed assets, goodwill 15,000, machinery less depreciation, livestock as it is, building less depreciation, office furniture less depreciation. So total of note number 11 is 82,350. Note number 12, non-current investment, we are going to write 8,000. Note number 13, 14, 15, 16 is nil. Okay. Then note number 17 is with regard to inventories. Here we are going to write closing stock of raw materials as well as manufactured goods. Total of note number 17 would be 38,380. Note number 18 is trade receivable. So here we are going to write datas 45,000 less RBD 1,350. So we will have balance of 43,650. From this, prepaid expenses which is included in the data should be deducted. So data's amount is 42,650. For this we are going to add bills receivable together. The total of note number 18 would be 46,650. Note number 19 is cash and cash equivalents. Total is 11,000. Note number 20 is nil. Note number 21, from the total preliminary expenses we are going to write 50% which is written off. Remaining balance is 2,500. Prepaid expenses which is given in the which is included in the datas, here we have deducted. So here we have to show that. Okay. Then payment of advance income tax, that also we have to write. So total of note number 21 would be 7,500. Then we are going to prepare the balance sheet. Under equities and liabilities we have to list out all the equities and liabilities. Note number 1 is 1 lakh, 2 is 22,190, 3 is 31,200, 4 is nil, 5 is nil, 6 is 3,000, 7 nil, 8 21,490, 9 is 12,000, 10 is 4,000. So total from 1 to 10, that is total of liability side is 1,93,880. Then continuing in the same format, under assets, note number 11 82,350, note number 12, that is non-current investment 8,000, 13, 14, 15, 16 is nil. Then note number 17 38,380, note number 18 is 46,650, 19 is nil, 20 is nil, 19 is 11,000, 20 is nil, 21 is 7,500. So when you take the total from 11 to 21, you get 1,93,880. Okay. So this is the solution for the present question. Let me take up one more question in the upcoming video. Thank you for watching.